Well, this matters on a lot of different fronts. I mean, first of all, Erdogan is discovering that the one market in the world you cannot bully around is the currency market. And a lot of guests have already said that this is very similar to the Latin American crisis or the Asian crisis of '98. What's different here, though, is it's really a self-inflicted wound. It's very much politically caused rather than economically caused. Turkey's economy is actually growing at 2%, but because of all of these political standoffs between the Trump administration, it's really created a huge capital flight. Now, the key thing of why this could be so important for the rest of the world is the following. It's having a ripple effect, first and foremost, in all the emerging market nation currencies. So the ruble is weaker, the rand is weaker. And the one thing that your prior guest has just mentioned, I think is very interesting and people are not really considering, is if the price of oil goes much higher, let's say we have further sanctions against Iran and we exacerbate our relationship against Iran and that causes oil prices to go to 70, 75. Oil is priced in dollars. All of these emerging nation markets are buying oil. As a matter of fact, Turkey has a huge appetite for buying oil. And therefore, they're going to be very constrained to do anything else simply because their energy needs are going to sop up a lot of their hard currency reserves. So you could have a very, very concerted pressure across all the emerging market nations, which can then spill over. People have also talked about the fact that euro is now very, very vulnerable because, of course, European banks are exposed to Turkish debt, but also because of export issues. You know, they simply, Europe is a very export-dependent region, and if all those emerging market nations really contract, it's going to cause a pall, global growth pall across the world.
So now, you mentioned the euro. So if you are the ECB and you're going through this monetary policy unwinding of QE, what do you do here? When do you act? What are you thinking about today?
You're thinking about the fact, oh my God, I gotta stop this whole normalization process perhaps right now because I don't know exactly how bad the balance sheets are going to be. You know, the rumor in the currency market today was that at 7 or higher, the whole Turkish banking system pretty much is insolvent. We don't know if that's true, but it's getting close. And the one thing I will tell you about the currency markets is they will always push it to the extreme. I mean, right now, dollar Turkey is trading around 6.5. I'm very confident they're going to try and push it to 7 to see how far, how strong they can do it. Because Erdogan has done nothing right now to fight it. The key thing is that they need to pretty much have to institute capital controls at this point, and they're not willing to do that. So you're going to see the crisis just exacerbate as we go forward. I think it's just not over yet.
Yeah, I was just going to say very quickly, I mean, neither President Trump nor Prime Minister Erdogan are likely to blink. That's not their style. But what do you think is going to happen next, very quickly?
I think the crisis is going to get worse. And I think it could reach some sort of a serious point where the issues could be much more than just simply local. In other words, it could have a contagious effect. We could see the euro go down lower. Ironically enough, this can also hurt the U.S. People don't understand how badly this could hurt the U.S. because simply the fact that the dollar is going stronger, the whole Trump administration policy is that it wants to increase our exports. Right. This is the worst possible thing for our exports. And I think you're going to see that in the second half of the year.